Understanding content insurance. Most of us have insurance, and while it may not be top of mind among all the other things we deal with every day, insurance can help protect the things we value most. If you think you need insurance, or even if you already have some policies, it makes sense to have a strong understanding of it so it works for you. Contents insurance covers the financial cost of repairing or replacing your household personal possessions and furnishings, such as curtains, furniture, white goods, stereo, TV, computers and other electrical appliances, clothing, jewelry, sporting equipment and even toys. This insurance covers household items belonging to you and to family members who live with you. These policies may also include items such as sporting gear and motorist wheelchairs, but do not include items permanently attached to the building, or insure the dress or portable items you might take outside your home. You can take out extra cover to protect things like your jewelry, cameras, mobile phones and sporting equipment from accidental loss or damage. These policies do not usually include cover for items friends or visitors bring into your premises, unless you list their names on the policy. Contents insurance is suitable for homeowners and renters. Homeowners can purchase it as a standalone product, or buy it in combination with home insurance as a home contents policy. Renters can also purchase low-cost renters insurance policies. If you are a renter or tenant, your possessions are not covered by your landlord's insurance policies. Types of contents insurance. The two main types of contents insurance are replacement value and new for old. A replacement value insurance policy covers only the value of your possessions, and the value of most items depreciates each year. This is why it is important to review your policy regularly and ensure your insurance is up to date. Most policies offer consumers new for old cover. This means you are covered for the full cost of replacing lost or damaged possessions with new possessions, which have a higher dollar value. You will generally pay a higher premium for new for old cover. How does new for old cover work? New for old insurance cover basically works on a like-for-like basis. What this means is that if you make a valid claim, your insurer may cover the cost of a new model to replace it. So, if you have a television stolen or damaged, you may be able to replace it with a brand new equivalent of similar value. This is instead of being provided the cost of what that television might be worth now. If the television is 5 years old, its value and price would have depreciated over the years since you purchased it. The chances are that if your television had been valued at the time it was damaged or stolen, it would be worth less than you paid for it. With some insurance policies, you may only get back up to what it was worth when it was stolen. This is where new for old is different. It could cover the cost of a brand new television to the same value as your old one when you first bought it. Many agency home insurance includes new for old cover, so in the event of you making a valid claim, they could replace stolen, damaged or lost items with a like-for-like item that is brand new. Some limitations and exclusions might apply, so read your policy documents for more details. What are you covered for? You can choose different levels of cover under a contents policy. The least expensive option, which gives you the bare minimum of cover, is a defined events policy, which would typically only cover your belongings if they were lost through defined events such as fire, or if you were burgled. For a much broader level of coverage, policies that include accidental damage will protect you against the cost of incidents, such as accidental breakage, or even a stain on a lounge or carpet. Some contents policies may also give you the option to cover some of your personal possessions or valuables away from home, such as sports equipment, jewelry or cameras, though there is usually a limit for unspecified items. Check with your insurer to see what restrictions apply. Most contents policies have fixed, unfixed or flexible limits on how much you can normally claim for certain items. For example, your contents policy may only pay up to $500 for a ring, even if it would cost $2,000 to replace. Valuable items may need to be insured for a higher specific value or listed separately under your policy, otherwise they might not be covered for their full value or may be excluded from a claim. It is important that you get a separate valuation for expensive items such as jewelry, and make sure they are listed individually in your policy. You may need to pay an additional premium to properly insure all valuable items. You should also declare anything that could be classified as a collection to your insurer, such as DVD, rare books or stamps. Having enough contents insurance. Many people underestimate the value of their contents, particularly if they have not written down what they own or have not updated a contents inventory list for a while. It is easy to forget to add new things you have purchased recently and gifts you have received. The Understand Insurance Contents Inventory template can help you manage your contents policy. When working out what level of contents insurance you need, start by listing all your belongings and assess how much it would cost to replace them at today's prices. When cataloging your belongings, keep your list as detailed as possible. Serial numbers, receipts, photos and information about the condition and year items were purchased will help you work out how much to insure for. This list, along with documents showing proof of ownership, may be helpful if you need to make a claim. By reviewing your contents inventory each year and updating your policy, you can help make sure you are always fully covered. The annual renewal of your insurance policy is a good reminder to review and update your home contents inventory, and make sure your amount insured is accurate. Many insurers have inventory apps for smartphones and portable electronic devices, as well as downloadable online programs, that may help you put together your own home contents inventory. 5 tips to make sure you choose the right policy for you. 1. Know your options. It pays to shop around, so get quotes from a few insurance companies before you make your decision. If you want to know about a company's record in your area, consider contacting your state insurance department or the National Association of Insurance Commissioners. You can also get more information from consumer guides and local insurance agents. 2. Do not make assumptions about what is covered. For example, flood and earthquake coverage are not part of most standard policies, so be sure they are included if you need them. On the other hand, confirm that you are not paying for insurance that you do not need before you commit to a policy. Expensive personal property, such as jewelry and computers or other electronics, may require additional loader policies. Find out what any policy includes, or does not include before you sign up. 3. Compare apples to apples. When you are evaluating prices, consider making a chart that spells out exactly what is covered under each policy. You may find that the reason that one policy is a little cheaper is because it does not offer as much coverage or the same kinds of coverage as another policy, or because it has a higher deductible. You should also look at the maximum amount that each policy will cover, then, consider all the details and determine which one offers the best value for your needs. 4. Consider a higher deductible. The deductible is the amount you must pay to cover damages before your insurance kicks in. The higher the deductible, the lower your monthly insurance premiums will likely be. The risk is that you will have to pay more of the costs from your own pocket up front if damages occur. You can lower that risk by taking proactive steps, such as installing storm shutters if you live in a hurricane zone, or replacing faulty wiring or aging plumbing, for example, to try to minimize your expenses if a disaster occurs. 5. Ask about discounts. Some insurers offer discounts for safety steps you have taken, such as installing an alarm system, smoke alarm or better locks. Retired people may get lower premiums, and your employer or professional or other organization may have programs that offer reduced insurance costs. You may be able to get a good package deal, as well, if you buy both home and auto insurance from one company. Some companies also offer longevity discounts for customers who have been with them for a few years. Be sure to ask which discounts you may qualify for,